This week, all business and investors should be watching especially and closely the latest employment numbers and equally the wage price index. Remember, this is the number a few months ago the Reserve Bank said it was watching before it would raise interest rates. As it turned out, it went earlier. So let's bring in here Warren Hogan, independent economist and consultant for the small business lender Judo Bank. Warren, always good to have you in the program. These employment numbers are the key right now because while people have jobs, the housing market stays strong, the spending stays strong, JB Hi-Fi can make money, people can build homes and BlueScope stays strong. So it's all related, isn't it?
The jobs numbers tell us about economic resilience, as you just mentioned, but they're also really critical for inflation. That is, that wage inflation that comes out of the labour market, that's the real inflation threat overseas here in Australia. So the strength of the labour market is the single most important indicator for the economy over the next 12 months, not just as a guide to the strength of demand and spending, as you said, but also about where inflation's going.
Because on the program here, for quite a number of weeks now, we've been talking about the signs of falling inflation, falling oil prices, so fuel prices, the fact that used car prices are going to start to come down, the fact that there's falling timber prices in the United States, copper prices around the world, wheat prices. So there's a whole lot of evidence that price inflation is coming out. But that's why wages is important.
That's it. So the pandemic shock, the global shock, the supply chain disruptions, all of that seems to be now easing back and should continue to accelerate. All the indicators are telling us that. But really, that's not the inflation threat. The inflation threat is wages, whether it's in the United States, Europe or here. And that's what's going to determine whether or not rates have to go a lot higher and whether they have to stay high, whether they can cut them. So really, it's the wage numbers that are critical.
So let's have a look at this. So this is actually coming out of the National Australia Bank labour costs plus private sector. Just what does that explain to us?
This came out of NAB's latest monthly survey, which was released last week. It's their wage price series mapped against the wage price index from the ABS, i.e. the data we're going to get this week, and it is clear what that's telling you. That's telling you that the NAB survey is picking up a surge in wage costs in this economy in the middle of 2022.
So that's coming direct from businesses.
That's
so that blue line taking off right there is showing you what's happening in business. Or I've got a second one I want to show you as well. And this also comes from the Bureau of Statistics and EQ Economics. And this particular chart again shows a big change. So what does this show us?
Well, this is the same wage price index we're going to get this week up against the ABS's underutilisation rate, which is upside down. So it's a broader measure of labour market usage or utilisation than the unemployment rate. So it's extra hours and all that sort of thing. And it's at the lowest point it's been in 20 years. And that's telling us, along with the NAB survey, the same story, and that is that wages are accelerating in this economy.
So just very quickly, the unemployment rate is forecast to be steady at 3.5% this week. But that wage price index, that's going to be the key for the long-term sticky inflation.
The wage price index is critical Wednesday. Don't worry too much about the headline number. What we want to see is the wages in the quarter, what the negotiations that happened in the quarter. That'll tell us where wages are heading, and I think that's going to be up.
I'll tell you what, Warren Hogan, always good to have you in the program. Many thanks for your time today. We'll be watching that.